Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, today is the day that the fiscal cliff gets started, the negotiations, the horse trading. Let's talk about volatility on the week and maybe what that's implying for the outcome of this fiscal cliff. Let's start with equity vol. Now, to be truthful, equity vol did increase a little bit this week from Monday through Friday. However, let's put it into perspective and into context. Volatility fell out of bed between last Friday and early Monday. So although vols did go a little bit higher week on week, it's really more of a fact that they're oversold on Friday. And keep in mind, skew softened, term structure came down. So a lot of traders will say vol didn't go up, but actually overall it did very, very slightly. Moving on to the fixed income market, volatility continues to get sucked out of that market. Traders say to me there's no volatility to be had right now in any product. It's more about price, a lot less about volatility. Volatility continues to dwindle lower every day this week. Now, moving on to foreign currencies. Foreign currency volatility between Friday and Monday of last week was basically unchanged, dwindled lower, dripped lower every day this past week. Volatility was considerably lower, especially when you look at euro currency and the Swiss franc Japanese yen. The outliers were Australian and Canadian, both down, but not down as much as the European currencies and the Japanese yen. Onward and upward to gold. Gold is the outlier, I guess, of all volatilities. Gold volatility fell sharply, just like the equity volatility, between Friday and Monday of this past week. Volatility, though, continued to drip lower and a lot lower. Most of the traders I spoke to in the gold pit said really it's just a lack of buying interest, a lack of interest as it's just confined in this tight range. And do keep in mind the last couple of weeks we saw a lot of buying interest in the out of the money calls between the 1750 and 1800 strikes, March, June, and September of next year. That evaporated, thus volatilities dropped considerably. It's also worth noting that when you look at the base metals, aluminum, nickel, copper, steel, those vols fell as well, but not nearly as much as gold and silver. Lastly, oil. Oil is a story just similar to the equity market, that between Friday and Monday, we saw a pretty large sell-off in oil volatility on Monday, maybe overdone. Volatility trickled a little bit higher toward the week. Vols did end up higher on the week, but again, there was a massive sell-off of volatility on Monday, and a lot of traders I speak to think it's just a snapback. It's not really a sign of things to come. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.